Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about my take on earnings report of Google and Meta, which are the top two largest positions in my portfolio. Before diving into the numbers, I should say both companies reported bad numbers in their earnings reports, to be honest. I believe Google earnings report was just okay, and I would say below the average expectations, while Meta earnings report was absolutely terrible in terms of the numbers. The Meta numbers surprised the investors in a bad way. It's not, of course, because they missed on analyst expectations, and as analyst expectations doesn't really matter. It's not even because their main business lost money or didn't grow, because the main business of both companies reported okay numbers. So for Meta, it's not maybe grew, but it's still okay numbers. The reason investors were disappointed and their reports were terrible is simply because Meta and Google both invest a lot of their free cash flow into risky projects without any immediate return and hired a lot of new engineers and scientists, which not only cost significant amount of money for investors, but also these new engineers will receive stock compensations, and therefore the share buybacks of the company will have less effects on shareholders' equity. And that's the main reason investors were disappointed with this earnings report. Google hired 30,000 new employees, and Meta increased their number of employees by 32% just in the last quarter, which are insane numbers, while their cost of the business is also increased significantly in this quarter. The main question you should ask is that are these new hires and investment in risky projects like Metaverse or Google Moonshot projects really going to add to the bottom line of these businesses in the next few years? Can they see a significant growth in their free cash flow as a result of these investments? Or they're just burning money on this research and development phase here? So if your answer to these questions is that they are burning cash and these projects are not going to be successful, then yeah, this earnings report should make you really unhappy about the management of these companies, and that's why some investors are selling their shares here. I personally believe they will see a return on these investments. Of course, not all of these projects are going to work, but if they burn money on 9 projects and then one project becomes a successful project like Google Cloud or Android, then I will be happy as a shareholder. I believe in the management team of Google and Meta as they demonstrated a great leadership and the ability to navigate the company through challenges and comes out with successful new business models in their history in the past. So now let's skim through the numbers here. Google see a nice, basically 13% growth in their total revenue year over year, which is of course 16% if you don't consider the effect of the currency conversion. This is great. It means they overall made more money this quarter than the last year. But their expenses also increased significantly. Their operating margin reduced from 31% to 28%, and their diluted earnings per share or EPS reduced from $1.36 to $1.21. If we look at the breakdown of their earnings, their advertising revenue from Google Search and YouTube ads grew by more than 10% this quarter, which is great. It means their main business is really doing okay, really doing good. Google Cloud is also growing at a fast pace by more than 30% this quarter. However, they still invest more money into Google Cloud compared to its revenue, and therefore Google still lose money on Google Cloud overall. And they still basically burning money on other bets. So this was for Google earnings report. Meta total revenue actually reduced in this quarter by 1%, so it was basically flat, while their cost and expenses increased by 22%. So this is crazy. Their revenue decreased by 1%, while their cost and expenses increased by 22%. So as such, their operating margin reduced from 43% to 29%, and their EPS earnings per share reduced from $3.61 to $2.46. These are awful numbers. The main three drivers for these decreases are first, less revenue per ad. Basically, they had 14% less revenue from their advertisement this quarter. The second driver is their capital expenditure, which was $7.7 billion this quarter. It's crazy. And finally, 32% increase in their employee numbers. The only positive part of this earnings report for Meta is the number of active users on their platform, which increased by around 4%. At the end of the day, I still believe in both companies and therefore I'm not going to sell my shares here. I actually want to buy more shares of Meta here as this company is massively undervalued. They have a lot of cash in their balance sheet and they virtually have no debt. They own the largest social media platforms in the world, and I think there is a good possibility that they will continue to lead the virtual reality platforms and potentially metaverse in the future. There you are, guys. I hope you enjoyed the video. If you want to see similar videos in the future, subscribe to the channel. Thanks again, and I hope to see you guys in the next video. Farewell.